All right, everybody. Happy Thursday. Obviously, we got the market pulling back in, and it feels like what's been the theme of late, where things start setting up, following through, and then we get a little squirrely. So we'll cover quite any questions we have on, say, progressive exposure, those kind of things. But we're just going to try and get through as many the Q&As as possible here. So first question was on NMM. Saying I bought off the platform on 9/12, sold half for just under 11%, another half for 16.85%. Would you start selling the last piece with 3 or 4 lower lows and bad closes versus good closes? Perhaps sell another half as it breaks the 20-day. It happened with BLOK too, but I did make money on both. Well, here's the deal. I mean, this is where, and it doesn't say your name in terms of the question, but this is where you have to have this figured out ahead of time. So look, you bought it perfect. And you de-risked it, really nicely into this run. So it looks like you sold a piece here, maybe here. And this is where you just have to ask yourself, what are you willing to give back? I mean, this is way too much now. In my view, this is where, you switch over to some type of a break even or better, or 50-day break even or better. So at the absolute most, I would have been selling here on this day. You closed clearly below the 50 on 10/28, or maybe you give it that low and sell it the next day. Or sometimes you might go half on the close, half on that low, because sometimes you get a 1-day, close below the 50. But that would only be, on a partial remainder of the position. But if you bring this up on a monolith, you've got likely multiple violations. Then you get the volume coming in, but this is after the fact. So it wouldn't surprise me at all to see this stock, continue to give way here, but it's not acting normal. So I would have, again, even 3 or 4 lower lows. Yeah, you should have been selling. Let's see, 1, 2, 3, probably over in here, or maybe you move your stop to that low. It's not finding support. So yeah, this pullback's just too much.
Yeah, I think going to break even after that move is probably the right spot, just because again it rallied 22% from the entry, and then pulling back from there to the breakout. I mean, definitely break even, if not the top of this base here or this pivot here back in September. It just tells you anything after that is probably just abnormal. It should have found support there, and it tried, but now it's rolled over. So
Question on IBIT. I think this is from Dustin. Wrote, I bought it on 10/11, which is right here. And bumped it on 10/28. From a full to overweight. Are you quicker to sell partials when you go overweight in a position versus a 25% position? Well, absolutely. Listen, for starters, this is not a great entry point. We talked about IBIT a bunch, and this is a better entry point, but I would still say this is at least you're coming through, this old high, and this risk, say, to this level is acceptable. Down here, I would never take, I would never buy this here. Generally speaking, I can't think of almost any entry I've ever made, looking like that initial one. So it's hard for me to, say what, I would definitely wouldn't start a large position if I was going to buy any position there. Now, so I want to at least grade. I don't think it's the best entry. Your second buy, I would be more apt to sell or to start a position here. And now into this pullback, do we get some type of a pullback buy, something? Then I'd look to add. But to the general point of, am I quicker to reduce on an overweight? The answer is absolutely. And that's both in terms of if the train's coming in on schedule or not. I'm only trading really large and aggressive if I have a good feel. Things are going well, and I have a feel for when should the train be coming in on schedule quickly. Because the alternative is you're just taking huge size with wide stops. That's a recipe for big trouble and large swings and volatility in both directions. We're looking for alpha. So we don't mind upside volatility. We're trying to, crimp off any and all downside volatility. Another question saying, how much time would you give a failure reset as a minimum for a flattening channel? I don't know what a flattening channel is or how you're using that. That's not language I generally, I shouldn't say generally, that's not language we use. Do you want the failure reset to be back up near the high as in the MTP workbook? He used the example of hook. I can't bring that up because that chart is not, that company's not public anymore. But for those who have it, yeah, Craft Brewers was the old symbol. And you're using QNST as your example. And this is where, if you look at the hook example versus the QNST, this is not really analogous. Because I remember that hook example very well. I traded it. So you were saying, you bought here. This is sort of the shakeout, and I'm trying to make sure I understand where you're highlighting the failure reset. I don't see a failure reset here at all. And if there is a failure reset, it needs to be setting up right up in here and then quickly going this way. This stock comes in, undercuts, just starts acting. There's no pivot here. So just because it came back does not mean that this is a failure reset. And even, this, look, you had a VCP here. It was a little sloppy. This was go time. It didn't. So if this was going to be a failure reset, you want to see the shakeout and it come right back. DUOL is a better example of you get the shakeout. You never really had a reset though. And yesterday would have been, a much better example. We actually bought it yesterday and then trimmed it out because train's not coming in on schedule. If this is a true failure reset here, this should go. Now the market's acting, a little weak. Maybe it's being pulled back by that, and we may get another subsequent, entry point in here. Now, though, you're looking at a reversal recovery, and it's just, again, it didn't come in right on schedule. But failure reset is it comes back into the range, resets a pivot, and then breaks out. You use CYBR as another example. And this one, again, I think you were using maybe this breakout, and this is a failure reset. And I would say, no, wasn't really even that crisp of a pivot here. It was a failed breakout, but this is not like a textbook pivot that then is failing and resetting, and neither of these pivots are ideal.
Yeah, and if I could just add, like when we see the reset, we want it to kind of be up near the failure point, because that kind of tells us that it's worked through that reversal or the supply that's coming to market up there, where this one's just too low, to Marky's point.
Well, and it doesn't mean you can't play some of these subsequent pivots. Listen, we talk about this all the time. Like we're just looking for different tools and techniques to get on board some of these names. But in terms of the actual semantics of, well, how do we consider something a failure reset? It's just so we've talked about with pullback buys. Well, anything can potentially be a pullback buy. Well, any failed breakout, I guess, where you find another pivot could be a failure reset, but that's not how we're using it. And we're being really precise in terms of, again, the actual tactics. Greg is saying platform traded Uber. Obviously, Uber was disappointing today. We had a large position in this ourselves and been trading around this. So obviously not doing what we had hoped. Platform traded Uber booked about 15% profit. Into this run here. On a 3/4 position that was on 10.11. Then it added back a quarter position on 10.29. Yep, that was right here. But then sold the bump as it didn't, because it didn't have enough cushion on its own. The profit from the partial sale in 10.11 should have had it covered, but doesn't look like you were willing to use that to finance the risk. Is that the way you would always treat a new entry? Well, as a general rule, sure, Greg. But think about, okay, look at the way we handled this. We're buying this here, adding to it here, de-risked here, and then added back. Now, what I think what Greg is referring to is the fact saying, hey, weren't the fact that we're up big on the other positions, wouldn't that sort of give us the right to maybe hold that bump? Yeah, but we didn't treat it that way because every trade kind of stands on its own. If things were going really well, we probably would have. Saying, look, we still, de-risked the entire trade. And we handled it kind of similarly. We bumped it back, didn't bump it as large as we had it up here. And then we're, quickly unwinding it here on the open. So I think you're thinking about it right, Greg. And this is again where, look, how much, anytime with the earnings, and this has been the challenge right now, where we've got a lot of stocks that are kind of not giving us quite enough cushions even yesterday. We had a number of names, we sold ahead of earnings in hindsight. Hindsight's always 2020 with earnings, guys. You're always going to ask yourself, well, why didn't I hold this one and sell that one? This is where, just making good decisions that stand on by themselves is the best way to protect yourself. And so in this case, look, we didn't get much of a cushion on the ad. We sold it back. If things are going really well, can you roll the dice a little bit more? Yeah, sure. But I would never hold a really large position with little to no cushion. And so Greg is sort of saying, like, did the fact that you already had a sort of a winning trade give you a little more cushion? Well, sure. But again, we've seen some pitfalls in earnings lately, and some of the actions got a little bit squirrely. So we're just playing things a little bit more conservatively. Sahil's asking about AZPN. Can you review my buy on 1029? Guessing it's right there. Stop of 240.31, or sorry, bought at 240.31, stop of 231. I mean, look, that's pretty standard. You're playing this short little pivot here. I think it's fine. It's not the best looking idea I've seen. It's not the worst. I like that you get volumes drying up in the pivot. Oh, look, RS is a little bit low. And you get earnings in a couple of days. This is where I think you'd see, can you get, into a cushion here ahead of the earnings and hold it? If not, you punt the name. But I don't think it's a bad use of the tactics. This is a little bit short. And like I said, it looks a little, looking at this base, looks a little laggardy. But even here, I guess this is a newer name. You've got you could make an argument it's a big primary base. This is pretty tight here. So no, I think it's acceptable. Michael saying, I see the potential of SG, but every time I get on, it throws me right off. Is SG a bucking Bronco? Well, sure certainly appears to be, doesn't it, Michael? Look, we don't know the bucking Broncos. If we knew them perfectly in real time, we'd never get on it, Michael. Right. So, look, this is another one. You've got this stock working on really this big primary. This is a primary base, is it not? Is this for one public back here? Sorry. Yeah. Earlier, but working on this large base, similar to Shaq, right? And my worry is, it's a bucking Bronco until something like Shaq. You're gonna have to wait in the earnings and then maybe get a gap, have a gap, if you will, which makes it really tough to be aggressive with the name. But it still hasn't failed. And what's worse yet, this may shake again. And then we go through the whole process where it has to come back up, mark itself back up. This is where, though, if that does happen, I'd want to see this next tightening be even tighter. It's still contending with some supply, Michael, is a short answer. But no, I thought, if you'd asked me a few days ago, I thought it was go time. Didn't follow through. Just exactly. Look, we had the position in the MSP. We're trimming it for a reason. Roberto's saying, can you value my buy on AORT? Bought it yesterday on a pullback buy. So, okay, you're buying right here, coming through that little. I don't love it for a variety of reasons. Obviously, you're contending with some supply right here. So if I was gonna play a position like this, what I do like is, look, you're expecting, my guess is if you bought this, you're punting it today. That's how I'd be handling it. I would have started a position and it's pretty tight, gotten right out. Or if anything, you let it undercut and maybe undercut the 50 by just a little bit, because measuring, it's pretty tight. So in that regard, I like it. And I don't know much about this particular company. So I don't think it's a terrible use of the tactics, but given that you've got this clear, reversal here, obviously reversals, you have multiple times it's been contending with this level and you're, well below that. So I would just start the position there. So assuming you took a small line, I think it's fine. Daniel's asking about CRDO on 1028 and added on 1029. Yeah, I don't like this buy at all. Bought here, added there. This is acting today completely normal. I had to stop below 1023 low and got stopped out today. Please rate my buys. Was my stop too tight with the 10? The stop's not too tight. The setup's just sloppy. There's been no time here, and it's not powerful enough to be a power play. You're just running into these, this looks like a bucking Bronco, right? 30+% correction, then runs right back up. This just looks like a name you want to buy, and you haven't had any time to digest this recent run. So this pullback is extremely normal. So to the point being, do we want normal action to knock us out of a name? No, which is why. And if I was buying, I shouldn't say if, I would never buy that pivot. So can't too tight. You can't be tight enough on a pivot. I wouldn't play. So this is just, I would rate this as a bad buy. And if you look at any of Mark's examples, look at the ones, from open positions, focus list, they don't look like this. And if we're going to play something that you're looking at a 1, 2, 3, 4, 5, 6, 7, 8, 9-day pivot, if you will. The shortest we're ever going to play something like that is a power play. And even then, I usually say, I don't like them. I want them more than 10 days. So this doesn't meet any of the criteria. Alex is saying, as you said, Monday, you're interested in how things are acting during the current trading day. If you see various pivots breaking out and following through, how would that change your decision making? Would that make you add a new position, even though you weren't really planning to? And what are other scenarios that might happen? Brandon's good question. You want
to see? I mean, I think what he's asking is, given that you were planning on sitting on your hands, like today, with the sell-off, if we were coming into today and we were seeing things break out and move, and even though we had decided like, well, there's really nothing for me to buy, would we change our mind? Well, yeah, sure, absolutely. As the information's coming in and we see stuff that's, buyable through pivots, well, yeah, and they start breaking out, potential to add exposure is always there. We want to kind of always hold that tension of, well, do we want to increase exposure today? Do we want to stay where we're at, or do we want to decrease? I mean, literally, that's the conversation that Marky and I are having all the time.
Yeah, and a good exercise to even run through, guys. We talk about keeping an open mind all the time. And let me, Mark talked about this a little bit on Monday, I think, of just the idea of progressive exposure and how all the great traders, they may not use that vernacular, but that's what they're doing. Yeah. And I'll use an example, though. One of the things you hear, like everybody loves to talk about Stan Druckenmiller and things. He came on CNBC or Bloomberg or whatever. And I think Stan Druckenmiller is one of the all-time great traders. If there's a Mount Rushmore, he's on it. But the one thing they never highlight is he talks about his flexibility, how he can give his view. They want his opinion. And yet he talks about, I can be really flexible. They never want to talk about that. And that's what's most important, because that tells me he can change his mind in an instant and get really conservative or really aggressive really, really quickly. That's exactly what we're trying to teach everybody here, how we do that. And so as far as a routine goes, always ask yourself, what do I need to see in order to get more aggressive? Or what do I need to see in order to tell me to start slamming on the brakes? And then you can just run that through to say, well, so to the point, we try never to come in saying we're never buying anything. We're just looking at the list and letting that tell us, is there anything here that's buyable? Now, maybe we're going to say we might take a wait and see approach, but if the first one comes through an alarm and blasts off, then we're far more likely to buy the next name. Now, if we buy the first, maybe we're looking at 1 or 2 names and we buy them both and they take off, then we're much more likely to buy name 3 and 4 as if it starts moving. So it's always letting the action dictate.
Yeah. And you asked too, like, what are the other type of scenarios? And there's a bunch. And I think too, it's important to understand people that haven't been doing this very long. It takes time to get to that point, to know what you want to see. Can we define it perfectly that, in a box that would fit everybody's definition? No, we can't. But we know with our own eyes, because we've seen this enough, what we need to see to get more involved or to get less involved.
And we've been living through this day in, day out for the last 3 weeks, on margin, back below, and moving.
A lot of
jockeying for very little progress. Yeah, it can get annoying at times, but we eat our own cooking. We're practicing exactly what we preach. And I can promise you, I mean, we're incrementally chipping our way up. But, in terms of, larger progress, it only takes really timing things well, one time to pay for a lot of jockeying. So,
and I'll just add one more thing. Like, that's what I feel like has changed from, say, even 5 years ago to today. Like, we have the confidence that we know what we're looking for, and that when that time comes, which it will come, we're going to do well. We're going to take advantage of the opportunity once it arrives.
Robert saying he bought SE on 918. Yep, we've talked about this one too. Bought this short little pivot here. Added at on the same day. Okay. Sold half on 1011, which is right here. For about a 20% gain, 21.4% gain. Thought it was looking okay with volume drying up until 2 days ago. Do the last 2 days look like natural reaction, or would you be out on the action of last 3 days? Would you have had this on a tighter leash? Okay, Robert, this is the decisions you got to make. Meaning, like, if you're going to play this for a bigger move, this is totally normal because to your point, you've had this really nice big run here. It may have to come all the way down to the 50. So how aggressive do you want to be? And this is where you've got to be willing to sell down to the point that you're comfortable giving back. And this is, again, if you're going to play this for a big move, you're not going to go through one of these. You're going to go through lots of these, multiple trips to the 50. If you're a shorter term swing trader, probably would have de-risked maybe half to 75%, into this move. And then, yeah, you can either set some type of a backstop here, or you can use tranches. Where, you let the strength or weakness of the stock take you out. As it gets parabolic, you can just cinch it up. If it goes parabolic, this one didn't. Stock's not doing anything wrong here. This is a nice breakout. Now it's just pulling back orderly. So that's where you kind of got to define what kind of trader you are. I know, again, everybody's looking for a scientific answer, but in terms of playing one for a big move, we've given all the tools we possibly can, especially between things like, backstop big move, or extended plus backstop big move. Those are the ones I'd be looking at if you're looking for specific tools, but then also just asking, what am I most comfortable with? Some people are not comfortable sitting with portions of a position. We've been sitting in a small piece of this for a long time, since over here, originally buying it here. Well, we've had to, de-risked into this big move. We're comfortable with that. So you have to ask, yourself, what am I comfortable with? What and give backs if you're going to play names for bigger moves are just a part of the deal. Let's see. Anders is saying, I would like to ask both Mark and Brandon. It was up around 5% for the year. Recently became negative 2%. Problem is that after I got stopped out, some of my remaining positions started to get good traction. But even when I add somewhat conservatively, as I gain traction, I got stopped out again. I feel like I'm out of sync with the market despite diligently following discipline. My batting average is roughly about 30%. Looks like you're about 2 to 1. Did this happen to you earlier in your career, and how did you overcome it? Anders, it's still happening.
Yeah.
Like, it's not just happening early. What you described is normal. The one thing you can do better, though, is when, okay, maybe your total net give back is still acceptable. You're down 2% in a good environment. We can make 2% in easily in a day. So you're still, close to, right around, hovering around that break even. I'm not saying you shouldn't be, diligent or throwing caution to the wind. No, I like the way you're kind of talking and feeling about it. But you're going to go through periods where, and your numbers are about right. So that win rate is what's keeping you from being profitable. Your number's really about break even, right? You win about a third of the time, make a little more than 2 to 1. If you only win a third of the time, you're just below break even. So that's what I'd expect. And if that's what you can do in a tough period, you're going to do well. I was also asking thoughts on LNCH. Yeah, it's just kind of leaking off a little bit here. I'd like to see, if I was going to be interested in this, I'd certainly want to see it at least set back up into this level, because that seems to be the spot, or maybe even come back up in here. Remember, I'm always right. We're not looking to get anything off the lows. And I can tell you, I was right now, what may even be happening. And I posted this on X, that we're starting to trade a little bit sloppy here. Indexes are pulling back. Maybe we just leak off into the election, and then no matter who wins, I'm just going through a scenario. I'm not trading this. I want to be clear. Regardless of who wins, maybe we have a relief rally in the market. And then everyone's going to go, see, this doesn't work. Oh, I got stopped out on a bunch of names and they all go higher. Well, guess what? Then if they're really going higher, there'll be subsequent pivots like this that set up. And I can remember literally in 2016, you can read what I put on Twitter. There was almost nothing to buy. There was no setups, and we were in 100% cash. And I was bullish, but guess what? It doesn't matter how I feel. There's nothing to buy. You can't buy anything. I bought a few things, but then within weeks or months, there were more setups. So we may go through another period like that. And the point is, don't get overly obsessed in any one stock, any one setup, any one period. I'm saying this to myself as much as anybody else. As like I said, we've been doing some jockeying too. Timothy's saying, I'd like to know why the select portfolio held GLW and earnings with only 1% profit. It was 25% position. Implied volatility was 5.4. Also, the overall portfolio was still in a small drawdown. So, do you have profits to play? I don't know what you mean by that last section. Look, we talked about this one back and forth. And we did the same thing we do in everything. We looked at, I think we were closer to 2%.
Yep.
But an implied volatility was 5. And we said, okay, in worst case scenario, we think maybe we're down, 3-4%. So was it a little bit of a roll of dice? Yeah. This is precisely how, but even as of 3-4 days ago, we're getting more traction than we are. If it was today, we'd probably punt the whole position. Yeah. Why? Because we're back on, it feels like we're just, you're riding from gas to brake to gas to brake. And yeah, but all in all, we're still looking at, do we have a small cushion? Given the implied volatility, was it acceptable? Yes.
And listen, this is where, again, having that risk curve that you're willing to take. We were willing to take that risk. We were okay with it. That's what you guys have to ask yourself. And it was holding up really well, versus, maybe even like an Uber that wasn't. Yeah, I mean, it was okay, but it already pulled back a decent amount. Well, this was, acting perfectly fine. And even looking at the volume profile, it looks like institutions wanted to own this.
Alex is saying, what made you choose to play slower and take smaller positions with larger stops opposed to the MSP? What do you mean exactly by slow, and how do we choose when to change to a fast approach? Well, I'll give you an example. Even in terms of, this example. So I wanted to own this name. We had a small position, I want to say right here. And I remember saying to Brandon, I think this is going to shake and then it's going to go. And sure enough, it shook right here. I think we buy a little bit of this. I think we bought a little bit of this even on the intraday. If you look at intraday that day, which we rarely do, then we bought more here. And then yesterday we went big and it didn't follow through, got out. This is what I mean by being fast and aggressive, like the really aggressive tactics and aggressive ads on balance have not been working as much. Where if you just take a trade like an ONON, which I think we bought one time, maybe here. And it just sort of sat with. I think we reduced here and then reduced some here and didn't add back. The overall net has been positive. NOW is another one that, we sort of still own. Like just growing into the trade, we bought some here, bumped it here. Rather than getting overweight, going really tight, with some of the tactics, de-risked into here, and now we still hold a piece. I'm just saying there's been more shakeouts and reversals in and around pivots. So accounting for that, and even with the MSP, if we'd been a little bit, something like it, how many times? Shaq's a perfect example. The smaller, less tight line you were able to stick with versus getting chopped around. We're trying to bump here with a tight stop. You want to getting shaken out where, that original small line, whether it was here or here, I can't even remember, coming off the lows is the one you're able to hold in. That's just been the nature of this market of late.
Well, I mean, too, this is, we talk about if you're going to use tight stops, you're going to get chopped around. Well, that's Marky's point. That's the environment.
It's been a little bit choppier.
Average stop loss on the MSP trades, the closed trades, is 2.24%. So there you go.
And the win rate's been the issue. Same to one of the prior questions. Ravi's saying, does VST qualify as a power play? It does. I actually sent this to Mark. It's a little bit squirrely, but even if this had stayed tight right here, we probably would have highlighted. And if it can stay tight and come through here, I think it is potentially playable. It's kind of leaking off a little bit, but look, you had this double. The only caveat here is this isn't really coming from a period of dormancy. If you look at the weekly, the stock has come a long way, 20 to 140 going back, just over a year. That's not really, I shouldn't say not really, that isn't coming out of dormancy, but you can get, this is where, you can get some type of a blow off. So that's the level I'd be looking at right there. But again, yesterday, not the best close. It looks like it's leaking off a little more. So it may need a little bit more time. Also asking about CNK. on 1025. Looked like a decent setup. Yeah, it's a Cinemark. Yeah. I see what you're doing, sort of trying to play this pullback. I don't love it, but it's a low risk entry. Could you have tried it, in a relatively high RS name? Yeah, I think so. It's somewhat creative. And, again, that's where, assuming you were sort of trying to play this, I would have liked to see maybe a better close. You just sort of closed inside and didn't, on 1024. But I like that you're at least trying to buy it as it was turning up and sort of trading near the danger point. Abdul Rahman is asking about CRNX as a potential pullback buy. Yeah, today I think so. I mean, this is not a bad use of the pullback buy. So you're coming back to this level. This is pulling back with the market and catching support. And honestly, I'd like it even better if it came back to this level and bounced from here. That would tell me it's that much stronger. Now, because the market's been a little bit weak, yeah, I think if this is a name you knew you wanted to own, maybe you missed it over here, it didn't tighten up enough. Yeah, I think it's one you could potentially entertain. Let's see. Matthew saying a question about DOL. Wanted to buy it yesterday as it passed Tuesday's high, but it was late, so I missed it. Is this a power play setup? Would that have been a good buy, or is that the right side too short? Look, it's been a little bit sloppy, but this is tight. I mean, this entire move here, yes, it's a power play. This entire correction is mid-single digits. So it could easily, if it's really strong, like I was saying, I would want to see it just go. I would not just buy it here. I'd want to see, can we tighten up a little bit? I'm always looking to buy things as they're moving in my direction. I'm not looking to get a deal. If everybody wants the stock, why is it going down? Even today, yeah, this is coming in with the market and it's trying to hang in here. I'd want to see it come back through here, and even at most, I'd want to see it. I'd want to buy or start a position coming back through here, or maybe even it puts us in something higher, like this, or you start a position like that, and you can get some type of a reset building like this. So James is asking, please rate the buy on ETHA. Ooh, symbol. Oh, the base. I'm sorry. Yeah, no, not watching. This is Ethereum, obviously. And you're looking at this, I'm guessing, down here. Yeah, it just looks really sloppy. You're also running into a bunch of overhead. Look, if this got really tight up in here, I'm just measuring. Yeah, even to this level right here, that's like 8-9%, and it's kind of sloppy. If this could get really tight up in here, I think you could try it, coming up something like this. But right now it just, this doesn't
look like it's under accumulation yet. So yeah, it needs more time.
But it doesn't mean it won't go higher. That's the other thing. Like, the ends don't justify the means. I mean, I could easily see a scenario where Bitcoin, a lot of these things just rip after the election. I could see a scenario where they get clobbered too. So keep that in mind. There's always two sides to the trade. But that doesn't mean, to the point about the bucking bronco. Yeah, it may get to the other side of the corral, but if you get thrown off and break a bunch of ribs, was that a good decision? No. And look, that's why, again, that low risk entry is really the key. And there's things I want to buy all the time, but they just don't set up properly. So I don't buy them. Steve is saying, can you please interpret the action in GKOS and how it alters your risk management thoughts on the position? It doesn't. And this is where, okay, another good example of, let's say you bought it here and you added here. I would, the tightest I would be on the entire position of the stop would be somewhere right in here. So, in a market that's not acting very well, this is normal. Look, do you want to see it pull back quite this much? Maybe not, but it's a one-day pullback. And we haven't closed yet. So it's very possible, if this closes, upper third of top third of the range, it's going to look that much like accumulation. So I would stick to your plan here. This has not failed yet. David saying, as your account grew in size, did your returns change? I'm looking at the example of the USIC where there were several multi-100% earners, but in the million plus category, returns are double digits at best. What's your experience? Hints as to investing a larger account size. I'm not sure what that last part means, but listen, yeah, the larger you get, the less aggressive you can be in certain ways or certain names. And we've used different examples, but if we want to buy a decent sized position, we've got to spend multi-million dollars. Well, look at some of the names, even on our focus list are different things. There's certain stocks then that you can't be as aggressive with. And it's a rule of all markets. This isn't about trading. Think of whether it's companies, doesn't matter what it is. Size inevitably, inhibits your ability to grow. So that's just part of capitalism. So there's the question becomes at what point or what size. The nice thing about this strategy is you have an incredible advantage being small, and even tens of millions, even 100 million is much smaller than your average mutual fund, larger hedge funds. You still have a big advantage in terms of liquidity over the competition. So yeah, in terms of, can you do things, hundreds and hundreds of percent with a much smaller account that you can't with tens of millions? Yeah, on average, sure. Because you can put your entire account in one name and know you can get out very quickly. You can't do that with a much, much larger account. So yeah, Brandon, you want to add anything?
Well, with that said, I mean, that's a really good point, and we talk about that a lot. But as your account gets bigger, and if you're not paying attention to the percentages and you're looking at the dollars, then that is also a factor. Now, have our returns changed? Not really. We're still looking to do 100%, if not more. There's tons of opportunity out there, and yes, because we're bigger, it makes it a little bit more difficult. But again, our approach really hasn't changed at all. And I think the reason why you're not seeing that in the $1 million, divisions is there's when you're playing with bigger dollars and you're not prepared for that, it is a different game. So
yeah, there's a psychological element to it. The most important point, though, I would add is, listen, if I had 50 billion to manage, we'd be looking at the same stuff,
doing it the same way.
Now our list would get much smaller, and we'd have to
change our tactics,
and it would change our tactics potentially even more. But we're not abandoning the discipline. So I would have to hold positions longer, and those type of things. But it wouldn't. Specific entry point analysis is a valid and viable discipline, regardless of size. Let's see. Alex is saying Carvana, CVNA had a high RPR score for a long time, yet I haven't seen it come up on the focus. The weekly tennis ball action has been really consistent this year. Obviously not today, but what would you need to see in order for this one to make the list? Well, yeah, obviously it's having a good response to earnings. Just because it has a high RPR doesn't mean it's anywhere close to a pivot. And this is where, I can look at a stock and say, well, where was the tradable pivot? Did you have one here? Yeah, you did. I don't remember where this was in terms of, RPR, back here over the summer. I think you could have made an argument for the stock there. But that's really where the only time it was really close in my mind. So I'm not seeing, this is just too short here. And yeah, okay, now it's doubled. You look for some type of a power play setup. But they're going to be names that go up all the time. Or like I said, things that blast off. It doesn't mean that there was a good, responsible, low-risk way to get on board.
Well, I think even down in that late June, it is still a little wide.
Well, it's okay.
Yeah,
I didn't really
like
measure
12%.
Yeah, there you go.
If you take that one day pause, okay, but then again, like it's it never got that tight.
Yeah, Brandon, and this is a good example of, okay, let's say we look and just we can go back here and just put it in so you guys can kind of see a little better. Oh, come on. Just go back. It's not letting me do it. We'll go back to earlier this year, but what he's measuring there is this pivot's 15% wide. That's why we wouldn't play this. It's not tight enough. So you looking back, you go, well, I could see maybe playing that, but then you measure it and you go, it's too wide. So, again, sticking to the discipline, there just wasn't really a way to get on board the name. ASTS, is there anywhere in its big move where you contemplated entering? It's a similar question, I guess. This one, I think we had, right here, I don't know if this was a power play. You had this run up. I'm not sure that was sort of your pivot, or you could have tried it maybe through here. I can't remember if we had this on. We may have sent this to Mark on Focus. I'm not sure. Again, lower priced, but if you're going to play a lower priced power play, this is how to do it. Ray saying, I have a hard time determining when to sell a position when it goes up fast. Example, Reddit I purchased on 9/17. Obviously, this has been a monster. 9/17 reversal recovery, which is right. 9/17. Okay, so you're buying it right here. Sold 2/3 of the position on the way up to de-risk. However, the remaining third, I always have trouble on where to sell. How would you handle the remaining position? Well, obviously, if you're still in it, you're in a really nice winner here. And this is where clearly, Ray, if you're holding for something, this big of a move, you're probably more of a longer term or position type trader. Now, you're in it. You've got almost a double on the remainder. And this is exactly, you did this right. So you played this here. And this was I was saying to Brandon yesterday. And again, we were measuring going, look, did we make a mistake? We wanted to own Reddit. And I even said this, some of you guys have probably heard us say, look, we wanted to own this name. Was trying to set up a primary base. This was a little sloppy. And this, measuring, I literally measured this again yesterday going, okay, in order to give this the proper room, was 8 or 9%. It was just a little too wide for me. And it was short and we weren't getting much traction. So in hindsight, yeah, it looks like that was a great buy right there. And if I'd really wanted to own it, I probably should have bought it and used some type of staggered stop with a percentage stop. I've done, that's acceptable. Now, I would have de-risked into this as you did. It sounds like de-risk 2/3 into this. I'm just now figuring, how much of this am I willing to get back? And then just setting a backstop along those lines. The good news is, look, this is a newer issue. We may have a power play here. So we've always got different techniques we're going to use. Now I want to see in coming days and weeks, look, if this can stay tight and give us some type of power play, by definition, a newer issue like this, it's not widely owned. That's why it's having, and I had a huge response, obviously very positive earnings, 420%, 68%. And this stock may just be getting going. So we'll look to see, can we get some type of power play or another base? But in your case, Ray, maybe you trade out of it and then you look to buy it back. But look, at this point, even backstop big move. The 50-day it's going to start playing rapid catch up, but it's all the way down here at 68. I don't think that's irresponsible. At the most, I would be backstopping probably here at this point, yesterday's low, and let that strength then try and keep you into a remainder of the position. But at some point too, you got to ask yourself, am I just happy with this trade? You're up many, many, many multiples. And at what point are you willing to just move on?
Well, and I think too, Ray, you could sell another piece.
That's right. You can always just keep taking it in half.
Yeah. I mean, listen, I know you're probably thinking, well, what's going to get down to such a small position, but who cares? At least you're still, if you sell half, you're still in half, right? Psychological win-win. And then you can just take it day by day and say, okay, well, because there is a time factor that you have to account for as well. How long do you want to sit in this? I think this is actually, a breakaway, on a recent IPO. It could just be getting going.
It's a good use of tactics though, Ray, even in terms of, look, the name was on, and I'm just to, pay you a compliment in terms of, look, using what you're learning and being your own trader and operator. I think we put it on over here, and, you took the first viable low risk entry you could find, and it's worked out well. Question on MSTR from Drew. Let's see. Can you grade my buy on Friday the 4th? Also, just one more point on Reddit, guys. There will always be names like this that you want to own, and that you just can't get on board, or maybe you didn't buy, or the one, and this is even the idea of coming out in the wash. You do this long enough, you're going to be in some of these and you're going to miss. That's just part of the name or part of the game. So don't get discouraged if you didn't buy Reddit and you wanted to own it. Back to MicroStrategy. Let's see. He's saying he bought it on the 4th. He bought it right here. And selling half of the 28th, the rest on the 30th. So it looks like, yeah, you sold here, and then maybe you just got out before the earnings. Look, this was short. Did it work? Yeah. I mean, I would only be taking a pivot like this in a really good environment. If you were doing that, let me just measuring here. I'm not sure exactly how you did this. Sort of trading near the danger point, or saying, look, if this name's really strong, it should just go here. Well, it did, and I don't know if it was a 99 at the time. This is a Bitcoin proxy, and for those who were watching their earnings announcement, I thought was quite interesting. They're basically just turning themselves into a Bitcoin holding company. But I think you handled it well. You sat through this first, what looks like, kind of natural reaction, boom, right back into new high ground. This is a good spot. You're pretty extended. It would be, pullback would be normal. So yeah, I think you handled it well. Costas is saying, what exactly means take off? Sometimes stocks go fast at +5 or 6, and then you say to yourself, okay, I should add more exposure, and suddenly, boom, you get smacked. Yeah, that's been the theme. Costas is, we see some good breakout action and they don't hold. Yesterday was a really good example. I said, this name, I was quite surprised. This is not good action. I was expecting this, when it didn't close well, I'm a little surprised it got clobbered today. But this name, if this breakout here, which was a nice breakout on good volume, was really strong, this follow through, I felt like should go. And your stop should have been right there. It didn't happen. So quickly, if you're going to, this is precisely what I was saying. These one day, it's not the breakout, it's the follow through. We're not seeing that subsequent aggressive buying, or support even in some of these situations. So the way you handle it is you've got to account for that in your tactics. And then quickly, I mentioned it in DUOL, we quickly reduced. It doesn't follow through. You've got to back off. What's the alternative? Dig in with an opinion, get sloppy with risk management. You do that, you're going to, be in really big trouble. So you've either got to slow your tactics or be that much faster and continue to sort of jockey for position. Those are your two options. Adriano's saying, can we replay the Shaq trade? I don't know how you want me to, replay it. Go ahead, and Brandon, where was the initial buy on this? I can't remember if it was here or if it was.
Are we talking about the platform?
We've gotten chopped. Yeah, the platform. We've gotten chopped around in this name a little
10
bit.
2.
10. Yeah. So this was, again, and we talked about this sort of, we were using a little bit of imagination, creativity, figuring, okay, if this is really forming a VCP, it should bottom right here. Started the position as it turned back up. And then it came back up. I think we added here, got shaken out there, added again here, shaken out here, and then it took off. But into the earnings. That was the tricky part. And I remember even when we added it for the MSP right here and it didn't go, I remember saying to the guys, I don't like this action. I think we even cut intraday that day, saying like, here we go again. But you can see how even in the larger context, it was still going through this process. So yeah, that's the blow by blow, play by play. Coors was up 14%. Why didn't he sell half recently? Well, I had mentioned that to Mark the other day. It's acting well. Power play-esque kind of situation. But here's the deal. Sorry, this is David asking this. You can sell some.
Yeah.
If you're up 15 or 14, 10%, you can sell some up 5%. Remember, if you're at a multiple of your risk, you always have that option on the table. Stock's still acting pretty well. So I wouldn't give up on it yet. I trimmed a little. We own some of this. This is a good example of a name too, and it's lower priced, but there's decent liquidity here. A 99 relative strength, trying to, give it the benefit of the doubt, even in a market that's not acting well. This pullback's normal. Now it could go from normal to abnormal really quickly. So, and one of the things you can do is you go, look, I'm happy with the gain. You trim some out to give yourself a little bit of padding for that. Dan's asking about GoDaddy. Is it viable? No. Obviously, look, I would not buy anything gapping up on earnings like this. I'm not buying. Now, let's say GoDaddy opened, maybe inside its prior day's range, and there was a viable pivot. That's the only if earnings are announced, I'm not going to chase gaps. If the gap is really small and maybe it's one no more than 2% above what is a viable pivot, then I'd consider it. This is not that. I'm just measuring here. I mean, look, could you argue I wanted to buy it above this level and this is tight enough? Look, if that was your buy point and this is, measuring, I don't love this setup. Then yeah, in that sense, it's potentially viable, but it's not one this isn't how I would buy a gap. And rarely do we ever buy a gap. See, Tim's saying I bought MSGE 1025 monolith pressure 1025, right? Where's 1025? Okay, right here. So you're trying to sort of pick it off that low. I'm not in love with that buy point. But monolith pressure is red. Can you explain why MPR pressure is red? Chart looks good. Well, this is where I would default to the monolith because it's basically saying you've had more net selling than buying, and it's likely due to this and this, and more down closes. You've got, 1, 2, 3, 4 lower lows. Now I see you're trying to pick it here, after this fourth lower low. It may work. And look, if you're going to try and buy something like that, I think it's fine. If this name was really strong, though, again, this whole structure would be set up higher. This would be pulling back to this level. Instead, it's below it. And if this stock was strong, this would have kind of come out the gate a little further. Now it's sort of stumbling. Again, it's a little bit, lower RS. So, but that's why it's under pressure. And monolith red is generally, or under pressure is it's a warning sign. It doesn't mean it's going to fail, but it's certainly far more likely. And given the action we've been seeing, I would not be, favoring a name like this that's lower RS at this point. I want to favor the names that are holding up the strongest. Sargent saying up a little bit this year, 4 to 5%, although it's been frustrating. They keep pressing the gas and then the brakes. Yeah, well, we're in that club too. What's more frustrating is that the NASDAQ SP up around 20. Can we expect to beat the market consistently? What's been your experience? For starters, I don't even think about that. I mean, the S&P would have to beat us by a wide margin for over a decade to even come close. Mm-hmm. And look, if you want to trade, if you want to benchmarking to me is just, if you're an individual trader, makes no sense. Benchmarks were created by banks to generate fees.
That's a really good point.
Indexes, all this stuff, ETFs, these are all creations. And for people who aren't trading in markets to charge everyone else fees. Has nothing to do with real skill or performance. If you get good, you'll whip the pants off the S&P in the long run. And here's the other thing you're not quoting. You said you're up 4 to 5% through the year. You didn't mention your risk. Right. You're just giving arbitrary numbers. Someone tells me they're up 15%. I made 15% this year. I don't care. That doesn't mean anything to me.
What did you have to endure?
Yeah. Did they go down 50 in order to make 15? If you made 4 or 5% and the worst you ever down is 1 or 2, I would argue you're beating the S&P, because on a risk adjusted basis you are. So again, but that whole line of thinking, in my opinion, is not where you want to be. I mean, you can add some color to that if you want, Brandon.
Well, yeah, I think just you got to really approach trading, investing, whatever it is, over the long term. Yeah, S&P is up 20% this year. Okay, but historically, what is it, up 8 or 9? If you depending on how far back you go, but think about what you had to endure if you just stayed invested in the S&P 500 for those times. You had some wild swings to then make 9% over the long term. If you do this right over time, I mean, listen, we make our, even if you go sideways for 2 to 3 years, you can make that up. in 1 year, no problem. You know, again, and then that's at 100%. Say you do it 2 or 300% a year, or compound, 100 and a 50. Again, when you just look at, when you do trading based on, the risk that you're taking, you just put yourself in a position to take advantage of really good markets, and then you're out of the bad ones.
Tim saying APLT and noticed it's performing well today in comparison to the market. Not saying I would buy it, but I think it warrants I watch it for a good pivot. Your opinion? You're absolutely, Tim. This is exactly what you want to do on days, things aren't trading well or whatever. What is trading well? The market's down. What's break even, or what's barely down, begrudgingly giving anything back? Precisely right. So yeah, if this can, best case scenario for a name like this, look, could you attempt this even tomorrow? Yeah, I wouldn't, most likely. I'd like to see, if we I'd love to see it just even go, maybe the market continues to trade off, and this just does this for like, 2 or 3 days. Then you buy it coming out. A rule saying, what's your approximate average loss percent in bad environment and good environment? Which environment has higher average loss percentages? The average loss percent generally is about the same. It's the win rate. So, we're low, mid single digits. And yeah, what changes is we're not taking bigger losses in tougher periods. We're just taking more small losses. Will defensive names usually have relatively lower RPR? Yes, certainly, because they're not. There's not as much growth there in terms of or momentum. So when managers or risk is moving risk off or defensive, what do they run to? They run to safety. Food, stocks, insurance, tobacco, alcohol, things, that
don't usually move much.
Yeah, that don't have strong growth. So yeah, that's as a general rule, that's correct. Perry's saying, so there is a length and depth component to a good pivot. Are you allowing shorter pivots in the cup versus the handle?
I'm not sure I know what that
means.
I'm
trying to. Yeah, Perry, if you got like an example, in terms of shorter pivots in the cup versus the handle, like, again, a short pivot, it's like, where's the context, right? Yeah. So I want to see the right side. So I can't really answer that just in a vacuum like that. And generally the shorter pivot, if I'm going to play something really short, the more powerful I want it to be.
Yeah.
Let's see. I'm not sure what the name is asking about GRDN. Yeah, I actually sent this one to Mark this morning. Potential primary, base or newer IPO setting up here. Look, this is tightening up. So 18 is obviously a line to be watching. I think this can continue to tighten here. Look, is it potentially tight enough even right here? Yeah, I'd love to see it tighten up a little more. I don't know much about this one. Looks like it, reasonably decent fundamentals.
Well, and the fact that it's up right now on on the day when the market's down, I mean that's a really good sign.
Yeah, look, could this be traded through here? Yeah, I think it could. Casey's saying, I'm a new guy. Welcome, Casey. Not sure whether this is the appropriate time to ask. What action do you need to see and over what period of time to buy ALAB? Yeah, well, we need to see this look like any type of a constructive right side, which it just doesn't right now. I mean, even right here, this is too short and you're running into, previous supply. So this kind of has that, again, has this doubled? Yeah, it has. So you have this power play look. I'd like to see this, tighten up in here, overcoming at least another 4 or 5 days minimum. I'd love to see, this stay, for this to be buyable, 75. So if it's going to be a power play, and this is run off the lows, at least in a power play-esque, it's more than doubled. So I want to see this not pull in now more than, 20%, which means, okay, from 70, I'm just doing some rough math, it can't come in more than this level. over the next few weeks and give us a tight right side. We don't have that right now. So
I think this is a good example of a name you stick on a secondary list.
exactly
Just
right.
because it's powered off the lows there so strongly, and the volume profile tells you that institutions are accumulating it, earnings are good. Now you just look at it once a day through a bigger list you have to see how it shapes out.
Yeah, what Brandon is highlighting too, you know, you look at, this big accumulation on the weekly. Okay, someone's buying it. Great. There's no right side yet.
The technicals now have to meet.
Right, exactly. We need a right hand side here, and we trade off the daily. So yeah, be patient and keep it on the radar. All right, a few more minutes here. Jason saying, please briefly explain what's a power play. Okay, first of all, check out Mark's first book. He gives the definitions in there, but the rough, we talk about this at length in the Master Trader program. We got tons of examples in there, whole section on power plays. So if you haven't done that, I'd suggest it as well for those of you attending. Well, I don't think we get the power play section this weekend, but it's this weekend or next weekend. It is roughly a double in less than 8 weeks. It doesn't pull back more than 20 to 25% max, and minimum 8 to 10 day consolidation. So those are your general rules. Let's see. Trying to get to a few questions from someone who we haven't heard from yet today. Sergeant's, I think, maybe just making a comment saying largest drawdown was 1.6% happening yesterday, was 80 to 90% invested. Yeah, and you're saying I think that's somewhat normal. Look, if you're 80 to 90% invested, that's semi-normal. Looks like we got through a majority of some of the questions here, so feel good about that. A rule saying on the 25th video, Mark mentioned if growth stock IBD 50 rolls over, small and mid caps can't hold, and if defensive stocks set up, that's not a good sign. That's an insight. Could you expand a bit on what you mean by defensive stocks? Could you give some examples? What are ways to know if the stock that's setting up is a defensive category? Well, I just gave you, some of those groups. The defensive areas are, think of it in terms of if you're a manager and you have this is might be new information for some folks. But if you're an institutional manager, a mutual fund manager, you are required to have a certain percent in the market. You can't raise cash or 100% cash. That right there, by the way, is just, if you and I are playing a game against each other, and when I say you, I mean anyone. Think if you're playing a card game or any type of strategy game, and you can do something your opponent cannot do by rule, who has the advantage? So think about that first. Because people are saying, "Oh, I don't like using cash like that." You should have the complete opposite mentality. The ability to get liquid quickly is a massive advantage. Now, so what do? They've got to sell what in a market environment that they deem risky. What do? They sell the riskier names and buy the more safe ones. Well, what are those names? Like we said, stocks with lower earnings, stocks that are much more mature, stocks that, whether it's a recession or, or growth or not, tend to do well. Sometimes the deep cyclicals, there's lots of different places they can go. What they don't buy, though, is high momentum, high growth, high earnings, high octane names that are generally the names where the biggest winners in stock market history come from. And this is, again, read Mark's first book, come to the Master Trader program. The groups themselves over history. And we're just reviewing some of the slides. One of the slides, I cannot wait to go over this again because Brandon and I were just looking at this an hour and a half ago or whatever with Mark, and how some of this has not changed in 100 plus years. Yeah. And it's those same classic growth groups are not the defensive areas. So yeah, some of this is a little bit of intuitive feel, but the more you do this, you just you see what's holding up well. You run a relative strength screen. And when you see, tobacco on, those type of names, or healthcare or things like that, insurance, in the high 90s, it tells you that, managers are rotating there because it's more defensive. They're looking to survive. That's how they survive. What is a trickier or tougher market? I see if we have a few more people punching some questions, which is great. We'll go a couple more minutes. I'm not sure exactly if that's what you're asking, Rule, but that's how we think about it, and that's how I think about it. Dan saying, given my performance last month and given the volatility and breakout performance after examining my trades, I started taking really tight stops. And if I get stopped out, watch closely for a pullback buy. I've also recently started to raise my stops to break even right away. Is this a rational plan for this month? My numbers are okay. I mean, look, he's saying, just under 3% with a loss, 7% in the gain. Again, what are we seeing there, Dan? It's the batting average, because he's right about 1/3 of the time. I love that you're being tight. Like, stay tight. And where you're going to make it up in a better period, that win rate is going to increase. So I think you're thinking about it right. And absolutely, I want to be tighter when things are not working. Alex is asking about Flex. How do you rate Flex on 1024? What wasn't good enough for you to play it? Right, 1024. Did we have this one, or was it FLXS? This is one, this was definitely a buyable right here. So the question, if you liked it here, why didn't you buy it here? And maybe you missed it here. So if you missed it on this day, I think it is buyable there. And look, it's not a terrible setup. This pivot here was fine. And if you look at this in terms of this larger base, I think it was okay. We just, again, when the list was that large, probably had better ideas. So,
That's fair.
Yeah. Our rules, same amount of learning I had in the MTP in 2023 and MPA sense is enormous. Listen to each weekly videos. Simply loving it. Okay. Thanks for the comment. And listen, Rule, I think you're thinking about it right. Just in terms of how long does it take to get really, really good at anything? So just digesting content, listen, the head knowledge versus that really moving into impacting your behavior and how you view things and being more insulated from noise and opinions and stuff that doesn't matter takes a long time. So, and in some ways, I still feel like I'm learning some of this stuff. So, and for those of you feeling like, oh, I'm not getting it or whatever, give yourself a little grace. It takes time to get really good at anything. Last question. Let's see, from Siren or Siren, not sure how to pronounce your name. Sorry about that, but signed up and paid for the MTP course this weekend. Haven't received the login details today. Any chance you can help? You're not going to miss the course. I'll pass that on to Bob. I'm sure if you haven't received, the workbooks, I'm not sure if they've been sent out yet, but obviously reach out to Bob Weissman. He's the one handling all that. And no, you will not. We'll
pass it along.
Yeah, you will not be left out. I promise you that much. So, all right, guys, we've been going just over an hour. Listen, not much has changed in terms of that. It's that same theme. We got some names that are working, and then all of a sudden, as soon as it looks like, we're getting, some escape velocity in certain names or even the MSP, then, we get some choppy or more aberrant action. I would be prepared, even going into next week, be prepared either way. What do we need to see in order to step back up exposure or back off? But either way, who knows? Maybe, remember, we're taking things one day at a time. And as the information changes, we act and respond accordingly. So yeah, keep an eye on the platform for updates. Obviously, a weekend video this weekend, and then we'll be back in the Q&A on Monday. So take care, guys.
All right. See you guys next week.